Welcome back. Gold has retrenched slightly, but it has had a very strong 2024. You can see gold selling now at $2,668 US dollars per ounce. That has been a record-breaking run. Let's get Brianne Gardner's take on the gold rally. Brianne, can this continue into 2025?
Yeah, so gold is interesting. I mean, materials have done well, and we do see upside in the materials space. I think gold is an area that we actually have been recently trimming. So we bought in 2023 and actually just trimmed and cut our gold position in half in October. And, you know, I have been on here before talking about gold, not a gold bug by any means, but I do think there is trading opportunity in that space and in the materials space. So gold has done well, up 30% in the past 12 months. You know, there has been a lot of benefits with geopolitical risk, concerns about, you know, the economy, and people do flee to safety for gold. And also central banks buying a lot of gold, right? So that has pushed gold prices up. We trimmed back our position around 2,700 per ounce. And since then are waiting for a little bit more of a favorable entry point again. So we do see some headwinds for gold in general. And those really are, well, with Trump now coming into office, you know, that is likely potentially higher inflation for the U.S. with his spending and government spending and potential tariffs and cutting corporate taxes that could push inflation, which would put downward pressure on gold. Also, tariffs that we just talked about today also pushes the U.S. dollar up, which we've seen a little bit of a pop in the U.S. dollar too, which does also put downward pressure on gold. So right now we're a little bit cautious, expecting to see gold retreat a little bit further from here. We would be buyers of the metal again around 2,500 per ounce. I think that's what we're looking for from an entry point. And also some investors are taking some profits on gold and shifting into more income producing assets such as bonds, right? If you can get yields and that higher income from bonds, some people are taking their positions in gold, trimming it back and shifting more into the fixed income space there. So, and also our expectations for gold to be higher would be on interest rates coming down. So we are cautious on that. We still expect interest rates, as we talked about earlier, to come down significantly in Canada. U.S. still come down, but not as fast at that pace. That would push a boost for gold and the precious metals. So again, that's where we see a little bit more upside. So right now we're in kind of cautious territory, holding, waiting for a little bit more. We think more weakness. Then we think, you know, over the next 12 months, we could see gold start to rally. I mean, I think Goldman Sachs just recently came out and had a price target of 3,000 per ounce for gold. So again, that's quite significant upside from here. The
vehicle you've used on behalf of clients, I understand, is a Canadian ETF that actually holds physical gold. Vault is the ticker, VALT. It's a CI ETF. Do I infer then that you do not buy on behalf of clients shares of gold mining companies?
Correct. We do use Vault, as you mentioned, the hedged version, so has done well with currency. Again, we could switch to unhedged if we see an opportunity there. But we like to get access through an ETF, through gold bullion that way. Also, we could do the US GLD. We have done in the past as well, or direct through Wheaton Precious Metals is another company that we do own, that we do get exposure through kind of materials in the sector as well. But mainly our gold exposure, yes, is through Vault, the ETF there.
Okay, let's finish with by returning to the broad stock market where we began this hour with you. What is your take on current stock market valuations, which have really swelled during the course of 2024?
Yeah, I mean, we've seen, you know, across the board, markets doing very well and have had a strong 2024. And our expectations are for 2025 to also be a strong year. Maybe not as strong as 2024, but looking at current valuations, if I had cash on the sidelines, would I be piling it into the markets right now? I think markets are a little bit stretched overall. If we look at the valuation in the forward PE of the S&P 500, we're sitting at around 24 times earnings, right? So historically, we like to see it around 17, 18 times. That's average. So I would say things are a little bit elevated now. So we wouldn't be surprised to see a short-term pullback or some weakness or some volatility, especially over the next 2 months before Trump gets in office. So we would be patient for putting capital to work, wait and take advantage of this volatility, pick up some stocks that are selling off that you can hold through and position your portfolio for 2025.
Have you built trimmed cash positions recently?
So we did trim back some positions, took some profits before the U.S. election, then started reallocating into some more U.S. Exposure, and still have a little bit of cash on the sidelines at this time that we are looking to deploy before year end.
Brianne, thank you so much for a full hour today.
Yeah, thanks for having me, Paul.
That was Brianne Gardner. She's senior